So, should you put down a 5% deposit? We are going to tackle this question and let you know what things you should consider for your circumstance. I'm going to be real with you, there is no black and white answer. There are both pros and cons to putting down a smaller 5% deposit. And whether or not it works in your favour is going to be down to a number of different factors, plus your individual circumstance. So let's get into it. Why is putting down a smaller deposit seen as somewhat controversial? Essentially, it all comes down to risk. So if you are only putting down a 5% deposit, what that then means is that you are loaning 95% of the property's value. Alternatively, if you were putting down a 20% deposit, you would be loaning 80% of the property's value. So if you're only putting down a 5% deposit, it then means that you are borrowing more to buy the property. Now, if you are borrowing more, you are essentially seen as a bigger risk to a lender, just simply because if we fall into a circumstance whereby property prices drop, which there is a lot of speculation over at the moment, there is a chance of you falling into negative equity, which is just where the value of your property is worth less than what you owe on the mortgage. Let's just say you were in a predicament whereby you wanted to sell your property so that you could move to New York and go and work in New York. If you were only able to get, say, £190,000 worth for your property, but you owe the bank £200,000, you are then at risk of either, number one, not being able to pay back the lender, number two, having to foot that bill yourself and therefore making a loss, which neither the lender nor you want. We have made a post previously all about negative equity, which goes into this in more detail. So if you want to have a look at that, you can check it out on the Instagram page. So when it comes to risk, whether it's taking out a mortgage or any other type of loan, essentially, if you are seen as a bigger risk to a lender, you will generally, and I emphasize generally, be charged a higher interest rate. So this is the same with mortgages. So essentially, if you're putting down a 5% deposit, you are borrowing more from the bank, therefore seen as more risk and potentially gonna expose yourself to having to pay higher interest rates on your mortgage. Now, on top of this, if there are more 95% mortgage products in the actual market, what that then does is it makes the market more accessible, particularly to people who are struggling to save bigger deposits. And if there are more people who are able to actually purchase property and get into the market, what that can then do is drive more demand and then therefore potentially drive house prices to increase as well. Now, if house prices are inflated due to a surge in demand, once that demand dies down, there is then a risk of properties falling in price and therefore, again, a bigger risk of dropping into negative equity. Because essentially, if you buy at an inflated price and then the price drops, you're then risking your property being worth less than the amount that you owe on your mortgage. However, it is not all doom and gloom. There are some circumstances whereby a 5% deposit can actually work in your favour. But I would say that the first thing that you need to even consider before even thinking about the mortgage is, number one, getting your property for a competitive price. Now, people are probably sick and tired of me saying this. However, if you see a property advertised for a certain price, it is always a art skim price. If somebody asks me for £10, I am obliged to say no. It's the same with property. Please make sure that you are negotiating on the property that you are interested in. It is expected by estate agents, it's expected by sellers. You are not going to be taking the mick by asking for a lower price. Believe me, it is the norm. By getting your property for a more competitive price, it then helps to protect you against buying at an inflated price and then the price dropping. Because if you get it at a competitive price, which is in line with what it is actually worth, then you're not at risk of the property price dropping and you falling into negative equity. The other thing that I would say is essential is to have a long-term plan. Please, I beg, if you do not listen to anything in this video, please just have a long-term plan. No matter what property you are buying, how much deposit you are putting down, please have a long-term plan. I understand that circumstances can change. However, in an ideal world, we would not be buying a property with the intention to only live in it for about 2 years. Why? Because in general, the property market takes a longer time for you to actually see returns. And so if you buy properties with the intention to only have it for a short period of time, you are exposing yourself to much more risks by doing that. So in what circumstances can smaller deposits actually work for you? So if you are someone who actually has a decent income, but it's just that you might be struggling to save a bigger deposit, say, let's just say, I don't know, you're living in London, but because you're doing lavish living, your rent is quite high and it's therefore holding you back from being able to save larger amounts towards your deposit. Obviously, when you buy a property, you are not going to pay rent anymore. So if you actually have a decent income, which would allow you to pay the minimum payments on a mortgage, plus overpayments, plus if your expenses increase, you are still able to make overpayments, and if you have a long-term plan to stay in a property, then putting down a smaller deposit could actually work in your favor, because you are in a position where you're planning to stay in the property for a long time, so you have a period to be able to actually see a return. And number two, you actually have the income which would permit you to make overpayments and build up your equity a lot faster, so that you can then remortgage at a later date after the initial fixed term that you have, and remortgage for a better interest rate. So how do you actually build up equity? So equity can be built up via capital appreciation. So this is where the value of your property increases. So you can add value to your property by refurbishing it, or you could also experience capital appreciation naturally. Say if there is something in the area that causes the property to increase in value. Let's just say that the transport links were improved, or there are more amenities added to the area, for example. The other way that you can increase your equity is through making overpayments. And this is something which is within your control. So let's just say the minimum payment that you have to make on your mortgage is £700 a month. If you overpay and made payments of, say, £1,000 a month, this then means that you are tackling the debt that you owe much quicker and increasing your equity at the same time, because you are paying off more of your loan at a quicker rate. So for me personally, I think that everyone should really work towards making overpayments to pay off their mortgage faster, because it then reduces the amount of time that you have your mortgage for. And in turn, because of that, it reduces the amount of interest that you pay over that entire period. A quick thing with overpayments is just that you have to ensure that you actually have the ability to make overpayments. So not all mortgages do allow you to make overpayments without paying a charge. So just always check the terms of your mortgage. Now, in comparison, if you were somebody who was planning to be in the property for less than 5 years, and if you took out a 95% mortgage and you knew that you would struggle to make overpayments on that mortgage, then a 5% deposit, putting down a 5% deposit probably won't work in your favor. Why? Because it is unlikely that you will build up enough equity in the time that you plan to have the property for you to actually see a return. And therefore, it puts you at risk of making a loss. And you don't want to be spending thousands of pounds on a property to then go and make a loss. And believe me, this does happen. Not everyone wins in property. So as you can see, whether or not putting down a smaller 5% deposit works in your favor is entirely down to your circumstance and a number of different goals that you have as well. So really, you need to make sure that you are seeking professional advice for your individual circumstance. So sorry that there is no black and white answer, that I can't come and tell everyone that yes, it's okay to put down a 5% deposit, because there are a number of different factors that contribute to whether it is a yes or a no. So hopefully this has given you a better understanding of how lenders actually work when it comes to putting down smaller deposits for a property, and also just to give you an idea of in which circumstances or whether or not it might potentially be beneficial to you to put down a smaller or larger deposit. But essentially, make sure that you are seeking professional advice for your individual circumstance. So yeah, thank you for watching. Put in the comments below what you think about putting down smaller deposits and whether you think that actually helps people when getting into the market. And yeah, thank you for watching. Bye.